Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money stuff that makes the world go round and sometimes the world stops spinning. In this video, we're diving deep into Ralph Lauren Corporation's latest quarterly report to see if the fashion giant is still strutting its stuff or if its runway is getting a little bumpy. If you love getting the inside scoop on these financial reports, make sure you subscribed already and join our growing community over on Discord, link down below. So Ralph Lauren Corporation just dropped its quarterly report, and what we have here is basically their financial checkup for the period ending the 27th of September 2025. Think of it like seeing how they did in the last few months compared to last year. They are a big name in luxury lifestyle products. Apparel, footwear, accessories, home goods, and even fragrances and hospitality. They're all about that classic Ralph Lauren look across the globe. Now let's get straight to the numbers because that's where the real story is. We are going to focus on what they are reporting financially. Looking at their balance sheet for the 27th of September 2025, we see that about 3.75 billion of assets are considered current assets. These are things they can turn into cash relatively quickly, like cash itself, investments, and money owed to them by customers. Their total assets are a hefty 7.3 billion. On the other side of the coin, liabilities, which is money they owe to others, add up to about 4.76 billion. This leaves them with 2.58 billion in equity, which is basically the owner's stake in the company. When we look at how much money they brought in or their net revenues for the 3 months ending the 27th of September 2025, it was about 2.01 billion. That's a pretty good chunk. Now compare that to the same period last year, the 28th of September 2024, when they brought in 1.72 billion. So that is a jump of about $284 million. That is a solid growth. And over the 6-month period ending the 27th of September 2025, their revenues hit 3.73 billion, up from 3.23 billion last year. This shows a clear upward trend in sales. What is really interesting is their gross profit margin. For the 3-month period, it was 68.0%. That means for every dollar of sales they made after paying for the cost of making the product, they had 68 cents left. This is up from 67.0% last year, and for the 6-month period, it's even better at 69.9%, up from 68.6%. So not only are they selling more, they are making more profit on each item they sell. This is likely due to them raising prices slightly and having a good mix of products that people want to buy. Now let's look at their operating expenses, specifically selling general and administrative expenses. For the 3-month period, this was 53.9% of their revenue, which is actually down from 55.5% last year. This is great because it means they are becoming more efficient with their spending relative to how much they are selling. For the 6-month period, it also went down from 55.8% to 54.5%. This means they are managing their costs well as their sales grow. All of this means their operating income, which is the profit from their core business, has jumped significantly. For the 3-month period, it went up by 37.3% to $245.7 million. And for the 6-month period, it increased even more by 34.0% to $519.3 million. This is a very healthy sign indicating strong operational performance. It seems like Ralph Lauren is doing well across the board. Their North America sales are up 12.6% for the 3-month period, and Europe saw an impressive 21.6% increase, with Asia following closely behind with a 17.2% jump. This growth seems to be coming from both their own stores and their online business. Especially their digital commerce is seeing big gains, with a 19% increase in sales for the 3-month period. This shows they are adapting well to the changing retail landscape. Even their physical stores are seeing growth in sales of 12%. Their Europe segment looks particularly strong, with a significant rise in operating margin. This improvement is driven by better gross margins and more efficient spending. Similarly, Asia's operating margin also improved nicely, showing good cost management and of course increased sales. And all of this good news translates directly to their bottom line. Net income for the 3 months ending September 2025 was $207.5 million, up from $147.9 million last year. That is a 40% increase. For the 6-month period, it was $427.9 million, up from $316.5 million. This means more profit flowing to the company and its shareholders. Because they have fewer shares outstanding due to their buyback programs, their earnings per S-share or EPS are also rising significantly. For the 3 months, diluted EPS is up to $3.32 from $2.31. And for the 6-month period, it is up to $6.85 from $4.93. That is a good indicator of value for shareholders. Now let's talk about their cash. They ended September 2025 with about 1.44 billion in cash and cash equivalents. This is down from 1.92 billion at the end of March 2025. This decrease is mainly because they spent a lot of money on buying back their own stock, which is a common strategy to return value to shareholders. and also on capital expenditures like improving stores and technology. They have access to significant lines of credit totaling $750 million, and as of September 2025, they had only used about $10 million of it mainly for letters of credit. This means they have plenty of financial flexibility if they need it. Ralph Lauren is actively buying back its stock, a move that reduces the number of shares out there, potentially boosting the stock price and earnings. Per Esher, as of September 2025, they had about $1.53 billion remaining in their repurchase program. This shows confidence from the company in its own future prospects. So what is the takeaway from all these numbers? Ralph Lauren is looking pretty strong right now. They are growing their sales across all regions, and importantly, they are making more profit on each sale and managing their costs effectively. Their digital business is performing well, and they are actively returning value to shareholders through dividends and stock buybacks. While they do face risks like global economic slowdowns and supply chain issues, they appear to be navigating these challenges quite well. Their strategy seems to be working, and they are in a good financial position. Alright, that's our deep dive into Ralph Lauren's latest financial report. What are your thoughts on their performance and their future? Let me know in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more financial breakdowns like this. And for more in-depth discussions and to connect with other finance enthusiasts, check out our Discord community linked in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.